Hello and a warm welcome to Talking Stocks. I'm Gugulethu Cele. Also in studio, I'm joined by Peter Armitage and Bryan, both from Anchor Capital. Now, from a little coffee shop in rainy Seattle that opened its doors back in 1971 to now having over 20,000 stores globally, we're talking Starbucks today. Good to have you with us on this particular interesting stock. I think a lot of South Africans aren't familiar with it from a domestic perspective, but heck, the marketing and those who take a lot of international trips must be very familiar with it, Peter.
Yeah, I think if you're watching the American movies, people are always popping into the Starbucks, got a Starbucks coffee, and it really is an absolutely phenomenal story. I mean, it really started from a coffee shop, and it's now gone beyond kind of a coffee shop to an experience and a way of life, and a business with over $60 billion market capitalization and value, a big key man kind of driver behind it, which we'll talk a little bit more about. But a business that's really captured the imagination of the investing public, and rightfully so, because it's generated increased profits year on year on year, launches new stores, and there's still quite a bit of growth trajectory in the business. It's a business that we think still has a story that can grow at kind of 15% plus in dollars for quite some time to come. Double digits, wow, you're optimistic. But tell us about that growth story there, Bryan. Also the spread geographically, I understand 60 plus countries that it's located in?
That's it. It's got 68 territories around the world. As we've said, just over 20,000 stores. Those store base is basically split between company-owned stores, just over 10,000, and then licensed stores, just over 10,000. With the license, they just get the licensing fee. So majority of the revenue does come from their company-operated stores. But it's a global business here. It is predominantly the US. 73% of revenue comes out of the US. Another 27% comes out of the rest of the world. And one of the areas where they're looking at and growing, but growing cautiously, is in China and Asia, where only 7% of that 27 sits. So pretty much you can go anywhere and find a Starbucks, bar South Africa, I suppose.
Exactly. Let's touch on the revenue split. Beverages, I understand they also do food, but clearly here the selling point is a cup of coffee.
Well, that's it. You know, if you look at Starbucks, Starbucks originally started out as a roaster and distributor of coffee. Howard Schultz took this business, revolutionized it, and said, well, why do you have to sell the beans? Why not make the cup of coffee to go with it? And that is where Starbucks started. And beverages have been the biggest driver of revenue for a long time. They've started opening this up into food and to a few other areas to just diversify the revenue base. So you're looking at a company here that you can go in and get a snack for breakfast. They're trying to get you in for lunch. They're trying to get you in for dinner now as well. So they're bringing in the food aspect. They've also then cottoned onto the back of like a Nestle with their Nespresso and the pods, where they bring single servings into the market from Starbucks' perspective, and they now have 18% of that market. So they have a brand that really people have a lot of loyalty to, and that area of the business is growing as well. So we're seeing this divergence and spread now, diversification in the revenue stream. But again, cup of coffee, and you can pick a way you want to make it, and they will do it for you.
Sure. It's interesting because reading through your slides, you also mentioned that they are leading the way, and I understand that there's a digital element at play here too. Does that mean you log onto your smartphone, press an app, and order a cup of coffee?
Exactly. That's exactly the story that they've got. They're looking into the delivery side of it. It's very small at the moment, being trialed in a few areas. But yes, you can log onto your phone, say you want a skinny cappuccino with an extra shot of this, that, next thing, and hit pick up, and it's ready for you when you get there. This is a company that embraces revolution, embraces technology. 16% of their revenue and payments are done on smartphones and smart devices. So it really is an innovative company. You think a cup of coffee is a bit boring? No chance. These guys have changed that. Clearly.
From a cash generation perspective though, Peter, are we facing positive prospects?
Yeah, I mean, it's a business with big margins. Makes about a 65% gross margin, which means that if it's selling something for 3 Rand, its cost is 1 Rand. That flows down to an operating margin of about 20%. To put that in context, the average operating margin across all industrial businesses in America is probably in the region of 8 or 9%. And if you're running at those sort of operating margins, your cash flows are strong. And what they do with that is they've got the ability then to pay dividends, and they split their cash payout in inverted commas to roughly half buybacks and half dividends. So they're decreasing the shares in issue every time, which is a driver behind earnings growth. and at the same time you're also getting dividends out of it. The share is not cheap. It's trading roughly at the average PE of the last 10 years. It's about a forward 27 multiple,
27, that's correct.
Sure.
which so the dividend yield is not high. You don't buy it for the dividend. It's the dividend's a nice kicker, but you buy it because it can continue to grow, and is has got an iconic place in the American market. You have to be a little bit cautious with businesses like this because a brand can get fatigued if it's not marketed and run properly. But certainly the team, the impetus, and what they're doing at the moment is supportive of continued growth. So you can see companies and shares like this come off, and they did go through one period where they slumped a little. But the impetus behind it and its positioning at the moment certainly justifies where the multiple's sitting.
I'd like us to touch on that slump because I think if you look at the share price performance back in 08, 09 during the financial crisis, the US was hit substantially, and clearly Starbucks was also affected here.
That's it. When the American consumer went through the dip in the recession, everybody came out with this, how to solve the problem. Cut out your latte, cut out this. And that sentiment did filter through, but not to the extent where a lot of people actually thought. People still were sitting and they were taking a lot of pain in a lot of areas. And revenue took a little bit of it didn't take much of a dip, but the sentiment around the stock took a bit of a dip. So, and at the similar time, you also had commodities. They're very dependent on the coffee price. So you had a bit of a commodity impact there as well.
Yeah.
So there's a lot of sentiment into this share price as well, which people need to understand is it's expensive on a multiple perspective, just on face value, even though it is in line with its long-term average. But if there's a little bit of a hiccup in the American market, growth starts to slow or something like that, people expect to say, okay, right, well, people are going to cut out their latte, they're going to drink less coffee. We haven't necessarily seen that to the full extent of what people have expected. So it's a company that, although the dips, it kicks back very quickly.
This share was at $10 back in 2009. It's now at $90. So it was at 35, came down to 10. And in fact, if you follow compound growth from the $35 kind of 8 or 9 years ago, the price is roughly where it should be. It's roughly the same valuation. But it went through that steep dip, and you kind of want to wash your eyes out and cry when you think you could have bought it at $10. But you must remember that everything in the market slumped enormously. But the price is, the American consumer and the American economy, I think, has got quite a few good years ahead of it still. We've only really just got to the kind of the right employment levels. So the macro conditions are good for the business, and the micro conditions in terms of how the business is growing and the innovation that it's showing. The next few years look pretty good unless there's a big shock.
Versus its competitors on the market, you mentioned Nespresso and the coffee pods. Is that a potential competition that will eat into its market share?
I personally don't think so. Nespresso has been on the market for quite some time now. Very popular brand in its own right. One we like as part of Nestle, but it's had very minimal impact on Starbucks.
But its competitors are not just the coffee
pods,
players.
no.
Yeah. I mean, it's for the discretionary spend. It's
Yes.
when you leave your house and you're going to go to the restaurant or buy a pizza or have some coffee. It's in that kind of basket of spend.
Yeah.
Those companies are typically very good businesses. Franchise businesses, we think, are the best business models in the world. A growing franchise business, they're kind of half franchise, half owned. It also makes sense to own some of the things, the really nice ones. And the spend in that space in America, they've been gaining some market share. So the spend hasn't exploded. There tend to be some real trends in America in terms of where that spend goes. Some brands outperform other brands over time. Starbucks is a winning brand at the moment. And I think where they're getting to is, what Bryan was saying, where they're expanding the time of day that you can participate in. I think 1,000 stores now are serving dinner. So they're now competing for a bigger portion of that, the customer wallet in terms of the out-of-home discretionary spend.
Well, let's get your insights on this particular stock then. Buy, hold, sell. We hear from our experts. Bryan, your perspective on the stock, buy, hold, sell?
I think it's a very attractive stock. I think it's a good quality business, good quality management. I like it to be in our portfolio. It is a little rich and a little expensive, a current trading 32, but on a forward of 27, growth of 15 to 20% is definitely a company that I like.
And as you always say, this is for the long term. 5 years on, 10 years from now?
5 years, yes. 10 years, I guess Pete mentioned earlier, your brands go through waves. So provided they keep this upspend, they keep the brand front of mind, I think it's definitely got the potential for the long run, but definitely for a 5-year hold.
Pete, I take it you agree?
Yeah, I mean, it's been a great winning share in our offshore portfolios. It's really, the share's done phenomenally well. I'm sensitive to valuation. It is fairly rich. I want to own it. If it's in my portfolio, I keep it, which really is a buy decision. But I'd kind of want to be buying at $10 less. I'm not sure if you'll be able to. So with a new $100 available to invest offshore, I might put half of in what I'd like to eventually be in and try and be clever and get in a bit cheaper. I'm not sure if that opportunity will ever present itself.
Well, we'll leave it on that note then, but the general consensus is that it is a buy for Starbucks. And that's where we leave it for this week, I'm afraid, but do catch us next time where we talk more stocks.